Welcome back. Canada has a big push on for electric vehicles. Here's a look by the numbers. The feds have a target that 100% of all cars, SUVs, and light trucks sold in Canada by 2035 be zero-emission vehicles. To get there, they're assuming 20% of vehicles sold will be zero-emission by 2026, hitting 60% of vehicles sold by 2030. That compares with about 9% in the third quarter of last year, or 34,313 cars. Of the zero-emission cars sold, battery electrics are now the big majority at 85.6%, followed by plug-in hybrid electric at 14.4%. And almost 92% of those vehicles are bought in just 3 provinces, Quebec, Ontario, and BC. The feds kick in $5,000 subsidies for the purchase of a zero-emission vehicle. And of course, they're spending billions to persuade manufacturers to invest here, including VW, Stellantis, GM, Ford, and counting. It's clear the government is willing and ready to spend to bring that EV manufacturing to Canada, but is that spending the best use of tax dollars? Gabriel Guguiere is a public policy analyst with the Montreal Economic Institute. Gabriel, thanks for being with us.
Thank you.
So I think the biggest argument we hear about the billions in subsidies to the manufacturers to bring that business here is if we didn't do it, somebody else would. What's your take on whether or not it's the right way to attract that industry?
Well, as the economist Frédéric Bastiat said, there's things we see and things we don't see. The things we see is that with the number floating around, we're talking about maybe $19 billion for the Stellantis deal and $13 billion for the Volkswagen deal. So in total, we were talking about $32 billion, which represent the Newfoundland and Labrador GDPs in 2020 for only 8,000 jobs. And what we don't see is what we can do if we took that $32 billion and in reducing taxes and regulatory burden, so we could attract way more enterprise and investment in Canada, which will be essentially better for the Canadian economy.
Yeah, I mean, it's interesting. We've always subsidized, of course, Big Auto's been a recipient of lots of government money, tax dollars over time, hundreds of millions. The numbers are really large here, Gabriel, and I guess that's one thing I'm surprised by is that there's not more conversation about it, including politically. Is it an easy sell politically to say, yeah, it's a lot of money, but look at the jobs? Are you surprised there's not more pushback on that front?
Kind of surprised because, as you said, it's a lot of money, and we're talking about a possibility of another deal of $9 billion, in Quebec. So it's only the beginning. So right now, a good economic policy would be to reduce tax and regulatory burden and not giving taxpayers money. Because in that situation right now, we're talking about job creation, but the fact is, in this economy, it's not about unemployment, it's about labor shortage. So we might simply displace job to companies that are paying taxes and net taxpayers to net tax receiver.
Right. And of course, the other argument we get is we want to stay in the global supply chain. We want to be part of vehicle manufacturing, which is kind of a big part of Canada's manufacturing base historically. Is that a worthy argument? Or should we, to your point, say, who knows what we would do with that money if we lowered taxes and let businesses invest and come up with their own ideas about what we should be doing?
No, as I said earlier, giving $32 billion in subsidies, which, as I mentioned, is the equivalent of the economy of Newfoundland and Labrador in 2020, is not a sustainable economic policy, which should aim to reduce taxation and regulatory burden, and so we can achieve much more with that kind of economic policy.
Just really quick here, it doesn't sound like this is slowing down, though, correct? I mean, it feels as though more is coming, not less.
Absolutely. So we need to hear the other side, because if it's only continuing, as you said, it's going to be billions and billions, and what are we going to reach in those kinds of deals? It's not good for the taxpayer, because at the end of the day, it's taxpayers' money. So, so a reflection needs to be done here in the House of Commons, definitely.
Thank you so much for being with us. Appreciate your time today.
Thank you.
Gabriel Guguiere is a public policy analyst with the Montreal Economic Institute. Well, the billions that are being spent so far are focused on keeping auto manufacturing here as it turns itself electric. Is that the only way to keep the jobs in Canada? Brian Kingston is president and CEO of the Canadian Vehicle Manufacturers Association. Thanks for being with us, Brian.
Thanks for having me on.
So it really is tens of billions, and even an industry that's used to getting some forms of incentives from governments, the numbers are big. Is that a justifiable argument that this is the only way to get that work here?
It is, and the reason is the United States Inflation Reduction Act. The U.S. has committed $370 billion to fighting climate change, with a huge component of that dedicated to attracting battery investment into the United States and effectively building out a North American EV supply chain. So if Canada wants to be part of that and increase our share of North American auto, we've got to compete with the Americans.
So we know that there's a compelling, at least emotional argument for continuing to stay in this game, especially, I'm sure, for the Vehicle Manufacturers Association. But should we actually be more agnostic about the jobs of the future or what kind of investments happen? What do you say to that argument that we're kind of there's an alternate universe where this 30-odd billion so far does something else for the Canadian economy?
This is a unique, once-in-a-lifetime opportunity to grow out an industry that, typically we've had about 10% of the North American automotive production share. Because of the shift to electrification and because of our endowment of critical minerals, we have a window now to build out the scale and size of this industry. Why does that matter? This industry is a driver of the Canadian economy. It contributes $14 billion in GDP. It employs hundreds of thousands of Canadians. Autos are our second largest export. If we can be part of this emerging North American EV supply chain, it will drive economic benefits for Canada for generations to come.
The Stellantis incident, if I can call it that, Brian, is cause for concern for some because, of course, we had a deal with Stellantis. They were underway, and then they saw that there were other sweeter deals happening post that Inflation Reduction Act, and now back to the drawing board we go, and tens of billions more than we thought. Is that a warning signal, though, that the numbers are going to get pretty large and that it won't stop, that a lot of companies that could set up in the U.S. will demand big numbers to be here?
The concern that we see with the Stellantis situation that's undergoing right now is that the government has sent mixed messages. They've been clear when the IRA, the Inflation Reduction Act, was tabled that Canada would compete. Now, when it comes down to it, we have this negotiation underway that's taking place in a very public way. That's the wrong message to send to investors that are coming to Canada. On top of that, this won't all be about battery investment, which is what's attracting the large incentives that you're seeing. We have the potential to build out the battery supply chain. So critical minerals, mineral processing, that will have a huge economic benefit for Canada. And I think we really need to focus on filling in those gaps with a really strategic approach to building out Canada's EV supply chain.
So you don't worry about kind of an endless series of requests from the vehicle, the automakers, and now parts suppliers. Where does it end, I guess, is the question people will ask. I'm not concerned about that simply because you have to look at the footprint that we have here in Canada. We've got 5 OEMs that operate. Most of them are converting over to EV assembly. They will be building battery plants to feed that. But look, globally, we're going to need 200 battery plants to meet the demand as EV production ramps up. Mm-hmm. It's not realistic to expect that those 200 plants are going to be coming to Canada. We need to keep a share of those to support our industry and make sure that we've got an industry moving into the future. So it's not going to be a never-ending list or ask coming from different sectors of the automotive supply chain. All right. Thanks so much for being with us, Brian. Appreciate it.
Thanks a lot. Appreciate it.
Brian Kingston, President and CEO of the Canadian Vehicle Manufacturers Association. Coming up, what does it mean for us when insurers stop insuring? That's still ahead. But first, the PGA says it will now merge with the Saudi-backed LIV Tour. That comes after a heated 2-year battle between the historic league and the upstart, which included tossing some of its golfers out after they took big payoffs from LIV. Part of the argument against LIV was the Saudis' rather dismal record on human rights. But it turns out to matter less to the PGA, which will now see the Saudi Public Investment Fund, controlled by its ruling family, as executive chair of the combined entity. We'll chalk this one up to, if you can't beat 'em, buy 'em. Back after this.